Good morning, everyone. It's Chrissy from Solstice ATR. I hope everybody's doing great on a Saturday morning, lunch, or afternoon, wherever you are. You can find us on Instagram, Discord. We use technical analysis and adaptive algorithm for trading. We are not a broker-dealer. Past performance would not indicate future results. Use at your own risk. Make sure to check us out on YouTube and subscribe. It's the weekly video for free. Hope to see you there. Okay, let's get started by talking about the interest rate hike, whether it's going to be 2, 3, or 4, or even 5. Federal Reserve Board, their arms are tied due to inflation. Secondly, we're going to talk if there is a change in the breadth of the market, the overall trend in the accumulation, and the wealth transfer to the newer generations. So let's first get started by taking a look at the Cumulative Pulse. This is an indicator that we use to read the overall, the New York Stock Exchange, the S&P 500, when we are in the accumulation phase and the distribution phase. Whenever the trend changes on a short time, we have to pay attention to the volume. And if there are buyers or there are sellers getting exhausted at the low and we're getting a reversal to the upside. Whenever we do that, we had a consolidation in the morning, first half an hour of the open. Eventually, we broke up. And the indicator gave us accumulation to the upside. On the lunch break, which is, the period of 12:30 East Coast till about 1:30, 2 o'clock, they tried to drag it down before they came back in the morning, which is Californian time, around 10:30. They tried to push it on a little bit in news. Then eventually, the last hour and a half of the market, there was a lot of accumulation and they dragged the market to the upside. And you can see it in the accumulation of all the different sectors, from the financial, consumer products, staples, technology companies. They started pushing the market up. Does this mean that the trend is going to change next week and we can start seeing buyers coming back to the market? Remember, we are not biased to either side. We trade what we see. Whether we are bull trader or bear trader, we make money, but make sure do not get stuck on one side and be wrong on the other end. Let's take a look at it in a little bit more detail on a daily chart. I'm using a 4-hour chart here on the micros. Today I did the slide on micros, ES micro, NASDAQ micro, Russell and micro Dow Jones Industrial Average in relationship to the 4-hour range in the stock market trend. We can see on Monday, we had the overnight action on Sunday down. Monday, they dragged it up. Tuesday, they had an inside day of the Monday range. Then in the overnight, we dragged it up. On the Fed announcement, when Powell talked about the interest rate hike and whether they're going to do 4 or 5 times a year and cut down, the taking money out of the banking sector. Usually when they pour money in, they're putting bonds to work at a lower interest rate. So there's more cash in the bank so they can let people borrow at a lower interest rate. When they tighten the budget, that means the Federal Reserve Board is pulling money out of the banks, so there's less bonds in the market, so because they bought them back. So there's less cash than accumulation, correct? So the banks are forced to increase interest rates, and that's how the Federal Reserve Board balances the overall market. Remember, I talked about the accumulation of the market. In the morning, when we were down, we were a little bit down, then they pushed it higher. They tried in the lunch break to push it back down, but they couldn't. But the accumulation was more to the upside. You can see on that 4-hour chart, the combination of those 4 instruments were pushed up to close above that linear regression down channel. If I go put another one there, we can use a drawing tool. We can see that this is the high. I can grab this pen. Okay, we can grab it like this, drag it down. We have another, this is, let's call it level 1 at a consolidation. We still have level 2 to go up and eventually to break this area here, which is very important, 57,000. So I'm going to erase this one so we don't use it, so we don't do anything silly. This is just for reference. That's why I'm using these things to help us out. Oh, come on. It doesn't want me to. You can see it. Okay, we can, okay, escape. Leave without saving, yes. So we can go to the next slide so we can see what we're doing. I use the micro as well. Here I am talking about the breadth of the market. Usually for each candle on a daily basis or hourly basis or 5-minute basis, there are buyers and sellers. I use these colorful candles. I know they look a little bit funky, but it gives me the overall if the trend is changing from bearish to bullish, bullish to bearish. And you can see on the upper labels, I have kind of some different one telling you if the trend is coming from a bearish tone to a bullish tone, and the color changes from dark red to lighter red to neutral candle to a light green, blank one to a bright green. So the sentiment started to change end of the hour and a half to the upside. So there was specific buyers on the overall New York Stock Exchange Composite for the all over sectors buying into the market, because we took the Wednesday candle down and we tested that Thursday candle from the low from the prior days from Monday. This is so far holding on the S&P 500 similar to the NASDAQ, and we pushed higher. We are right now just sitting on the 200 SMA, just a little bit underneath it at the 4:15 close East Coast, whether you use the 4 o'clock, 4:15 or the 5 o'clock close due to the futures trade a little longer. They used to trade from 4 till 4:15. Now they pushed it till 5. I still use the 4:15 candle as a closing candle for my trading. Let's go to the next slide. We can see here every time they did a rate hike in 1988, they did it 4 times. 1998, they did it 2 times. 2002, 2004, 2009, they didn't do anything. 2011, 6 times. 2011, 13. When they did the rate hikes a lot more and they started increasing interest rate, how long did it take for the overall market in 1 year to recover and get a higher return? This is scenario hypothetical numbers, which are real numbers here, historical numbers that happen. But what we're going to use these historical numbers in relationship to what the outcome can be in the future in case of a down move. We have as low as 0 down move and as high as minus 18.3 scenario in 2002. After the tech bubble, after the Twin Tower, we had a major spike down, as well as 2008, 2009. You can see that the spike's down. Even if we get an 8%, 9% change in trend, does this mean how long would it take to recover by end of the year for 2022 in case we end up losing more than 10% in an annual base, or do we lose an 18% rate of return? So let's go to the next scenario. We can see here, I'm using the New York Composite, which represent the overall New York Exchange traded stocks on the exchange. What I did, I used the New York breadth, where is the highs and the lows for the New York. Usually when the market is trending and it has balance and there's no volatility in the market, we don't get spikes minus 750 to 880 down spikes. These are the historical spikes where we lost minus 750 to 800, and we stayed there for a very short period of time, and eventually we recovered back to the 2 minus 200 range, from 2 to minus 200. This is normal market trends. You know, we get the cycles, we get those little bumps down, we get the reversal and go back up, we get the little bump and we continue higher. So right now, since we spiked down, we are back from that 800 range a little bit above the 750. Does that mean that the trend is going to be reversing back to the upside in the highs and lows of the New York Composite? And this only goes back to 1982, 2022. They did not have this kind of an indicator before. So I'm just kind of giving you an idea. You can look at the New York Composite and evaluate if we are in a reversal area or we are in a bad area. You can see when the COVID hit, we were the fear gauge was up there, the VIX was up there, the breadth of the market wasn't as good. it was leaning to the bearish side, and we had that drop from February 19th to March 23rd right here, and eventually we reversed by December, October, then we rallied and we closed above the February high on the New York Composite. We continued higher in January. This is the March low, the May, then we had June, July, August, September, range bound. We retested the 50% fib high and low on the New York Composite level, but we are still just sitting right underneath the 50 simple moving average on the weekly chart, 10-year of the New York Composite. So let's go to the next slide. This shows you in case the scenario, which is very bad, I'm going to talk about the bad times, in case, you know, from the high that we had on the SPX, which was around the 4,800, the ES was around 4780 area. Let's take consider the December high for the year in relationship to the January high coming back in. If this was the high for the year, scenarios would be to the upside. If the highs were here, are we going to get a major drop in the market? We had a 9% drop in the S&P 500. You can see that we reached that 4,300, but we looked as low as 4,235 on the 50 Fibonacci Fib. We consolidated right on the July and August low. We didn't test the June low. We didn't test the May low. These are still valued areas in case we go ahead south. I just put the numbers down here in relationship to where we closed on 1/27/2022 in the SPX as we speak today. So the most important thing, we trade what we see. You can see here it shows 44.3187. So this is the close on the 27th. In case we use those numbers, the 4 o'clock or the 4:15 or the 5 o'clock, I just want people to be aware of it in relationship to the prior high, annual high. Where we can head to the downside in the maximum pain house would be 33.51, which is around down here, the prior September, October, November of 2021 consolidation before the breakup. If this is, that means this is the worst scenario. On a good scenario, we can see on an annual, reset here, 50% fib. Can we reverse and continue higher in case we get a, 44% or 11% rate of return in the market? What we can do, we can evaluate those numbers and where we can be in the future in case things do change to the upside. So I hope this is helpful, these slides, to understand the overall. This is for illustration use, and it'll be able to help you out. Let's now take a look at the micro. I am using here on the micro the breadth of the market. I left it on the charts. I have to remove it afterwards. I wanted to use the daily charts, and I put this in the slide. And I used the volume on the candles to understand the relationship between the buyers and the sellers. In case I change this to an hourly chart or a 10-minute chart, I want everyone to see this, even including the overnight action. You're going to see the gaps in the breadth ratio and everything. When we were trying to accumulate, we were climbing in the morning. Everybody was thinking we're going to head lower. We eventually broke over the close. We tested the open range morning and broke up, consolidated right above it, tried to look up. We fell back in that range, and eventually we reversed right above the 50 simple moving average on a 10-minute bar and continued higher to close in the last hour and a half to the upside. So the volume changed dramatically. From being bearish, like you can see here, the sentiment on the breadth was bearish, and here it became bullish. The trend basically changed for us, because we were more on the leaning to the upside than being leaning to the bear side. And I want you to understand these things can happen in the market. So don't have a biased opinion when you're trading to the upside or to the downside. So we're going to remove this study out of the way. We're no longer going to show it. We're going to apply it so we can get it clean. And we're going to get rid of that volume in the candle, so it makes it easier for us to see if it's a red candle or a green candle in the overall market. Let's just right click on it, edit the properties. This is the trending volume profile. Oh, come on. Okay. So no, it doesn't like it, looks like. Okay. On this catch trending bar volume profile. Nope. multicolor. There we go. We're just going to remove the multicolor and apply it so we can have regular candles in the trend. And I'm using candle trend here. We're going to go back to candles so we can see solid candles bodies instead of using hollow candles. So we can see that the trend has changed. We're going to go right now to use the SPX. And we're going to talk about the ES. We're going to go 6-month daily. We're going to go 6-month or 9-month. It doesn't have to be that far out. And we're going to push OK so we can see the overall trend in the market. We were leaning to the downside earlier this last week and a half down. We retested this gap. We consolidated right at the 50 Fibonacci. We didn't test the May, but we tested we tested the July low, but we never tested the June low. We acted as support. This is a very important candle in this linear regression down channel to get the support. If we lose this, then that door's open to the downside for the June as well as the May low. If we reverse and continue, we clear the 200 SMA. We look for the 38.50 and 61.8 coming back from that sharp down channel, and we have it on a faster time frame. This is the SPX. If we look at the ES, we can see we are in a similar situation. We retested the July low, and we reversed from the October low October. Then this is the November. We fell down. We are right on the 200. You can see I have a linear regression down channel. I consider this like an eyeball, which is not really exactly the 50% between the linear regression up channel and down channel. This is the monthly Fibonacci for the month, which is no longer valid by Monday. It should be the last day of the month, so this one will be no longer valid. We have to evaluate the January high and low profile. So that's the S&P 500. Let's take a look at the NQ. We can see in the NQ, I have a lot of lines here, a lot of movements and components there. I have linear regression down up channels. We had the annual, we fell through the 50 Fib, we got to the 61.8, consolidated at the 261 monthly measured move, hit to the dot, reversed back up. This was the Wednesday announcement. We went back up and we consolidated to the upside. Does this mean we cleared the 50 Fibonacci on the NASDAQ because there was sector rotations from tech to different instruments because they were worried about the interest rate? If they're going to put that behind them and say, you know what, they're going to increase interest rates. Maybe the loans, when you go to get a bank loan, it's going to be a little bit high in interest, but it's still a write-off for everyone else. Most people think, oh, I'm paying more interest, but it's going to be write-off on your taxes. So there's a balance between everything that we do in life. So, you know, when the Feds push money in and out of the market, let's take a look at the RTY. It's a little different component. We tested the 100% Fibonacci for the annual prior year low. We're trying to reverse. We're getting a hammer. Does this mean we can continue to the upside? We have to pay attention to that channel that we broke down from right here and this linear regression down channel, which is a little sharper. This one is no longer valid. I have to remove it. I have to anchor it a little bit more on a wedge style. We can get a channel so you can see how I do this. So we connect either to this line, which is a control point, or to this one here, in case how you want to do it, how sharp do you want it to be. So I would connect it to this one right here, and we know where the linear regression channel to the downside and upside is on RTY. Let's take a look at the Dow Jones Industrial Average. We had these channels that we broke out of that symmetrical triangle. We looked up. Oops, we got to remove it. Oops, remove trend line 22. So we can see we were in a linear regression up channel. Eventually, we broke through that purple line. We tested the 38.2 Fib, got close enough to the 50 annual Fibonacci from the high and low from the January 4th to the December highs right here. This is the January look above and fail. This was the monthly expected measure move. We tested the 100%. We went from 100 to 161. We almost get to maybe around the 223 and reverse back up. Does this mean the trend is changing? We are in a compression side. We are above the 38. Does this mean the low here to this high here? Do we retest the 50 and the 61.8 to come back up above the 200 daily moving average? Let's take a look at BTC. A lot of people, you know, they love me, they hate me on Twitter because I announced a while back the short up here, and we lost the gap here. We couldn't recover, and we lost the 47,200, which was this candle in this area, I believe. Where was it? I believe, no, this one here. And we weren't able to recover. We tried to look up in the wedge, couldn't make it, couldn't get tested. It's almost like a double top, missing the gap in the overnight. We fell back down, continued, tried to go back up here, fell back in. We eventually tested the 100% monthly measured move. We got to the 123 or the minus 123 and reversed back up. Does this mean the trend is changing in BTC, and can we clear the 40,000 in order to continue to 42.5, the backside of the annual Fibonacci channel, which is, the channel here, to get back to the 45 area? If it does not, people are looking at the 26,000. If this is the change in trend in Ethereum and Bitcoin, I'd like to see Bitcoin coming back to the 42.5 and 44,000, 44,500. So this is the first two lines. If it falls through this Monday's candle low, because this is an inverted reversal hammer, it has to consolidate here in the last 4 days and break this candle in order to continue higher in this channel to the upside. This is the first thing that you have to pay attention to over the weekend if we breaks up to continue higher in BTC. Let's take a look at ETH. Oops, why is it doing that? /ETH. Okay, it's me, the operator. So we can see that we had the annual fib high to low for the year on the futures. We fell back down below the 61. We got to the 123. You can see at 150 and reversed back up in consolidation. We're still in that linear regression down channel. We have a midpoint here. You can see the machine did one here. I did this one here. There's a midpoint right here between those two lines, the linear regression channel. If we can clear this area, we'll look for the backside of the 50% Fibonacci and eventually the 61.8 on the annual chart or the 38.2. If it does not hold this candle down here, then we'll look for the backside of the 161 and the prior three bottoms here. In Ethereum, we have almost tested the backside. You can see that gap here. Like if I zoom in here, you can see that there was a small gap here. If I put the candle at the low here, it was 21.51. Where did we go? 21.58. Is it sufficient? No, the island reversal gap's still there, but it's close enough to get a reversal. If we lose that, then it opens the door to the other side. So no bias trade, what we see on the charts. Let's take a look at CL. Crude oil, we can see it's made an annual high. It's got a doji. It's got three of them up there. Does this spin on the weekly chart? Does it come back to reverse to around the $81 range in order to continue higher or not? It is possible, but pay attention to the charts. Let's take a look at GC. GC, if you can see it, if the fear gauge was up there in the last week or so, we were consolidating, trying to get out of that symmetrical triangle. You can see I had a couple of them. I had a linear regression up channel in this linear regression uptrend when we fell from here on the monthly back down. Then we reversed back up. We fell back in. We reversed back up, trying to break that annual fib. Channel from the top. We looked at it 38.2 on the annual, as well as we looked at the monthly 38.2. Missed it by a little bit. Then we fell back down in the last 2 days. Does this hammer with a 61.8x support and this channel to reverse back up? We have to pay attention to what the charts offer us, not what we think. We're going to remove some of these channels because there's a lot of them here, no longer valid. They went above them, they came back down. This one is no longer valid. You can see it there as well, remove drawing. We'll keep this one here because it was tested but no longer valid. We can no longer use it. We have to use this control point with this control point in this one in order to find a channel going up on, as well as this one here. So we can see that we are still in a linear regression uptrend, but holding the bottom channel on the annual chart. And this is coming from 8/9/2021 to 12/15/2021. And the lower channel is coming from 3/16/2020 to 8/9/2021. So we have to trade what we see. These is the major symmetrical wedge from the uptrend to the downtrend. We are in that triangle in compression. Gold has not been able to get out of its own way. it's not the safe haven that everybody used to think, that you can buy gold and hold it as an inflationary thing. We're going to trade it only for momentum. Let's take a look at right now AAPL. You can see Apple on study. You can see the reversal. That's the earning report. The numbers came out clean. Does it hold the 167 area, 167.50, or does it revert back to the bottom where it fell from that linear regression small channel that I had up here? Let's take a look at Amazon. Amazon, you know, when it fell down a little bit sharper, you can see it fell quite a bit below the annual low from the prior year. Does this mean that 28.81 gonna clear in order to continue back up, or does it act as resistance? Like, take a look at Facebook, FB. We can see Facebook is going to report in the next couple of days. We have to pay attention to what we see. We fell through that linear regression down channel as well. We fell through the upper major channel from here and here. Does this mean that this line in the sand would hold it back down at the 38.50, or does it reverse back to the downside? We're going to pay for what the earnings are. Let's take a look at Google. We can see Google reversed back up. The tech stocks are starting to get a little bit of fresh air. Netflix reported last week wasn't good. NFLX. We can see it's trying on that island reversal. It's consolidating here in order for Netflix to clear and try to fill partial, because this is the annual Fibonacci high. This was the 161 fib extension. We missed it by a little bit, trying to consolidate here in this island. For Netflix to get some momentum, you have to get out of that box in order to clear this top here or fall below there. Let's take a look at Tesla. Tesla, because of due to delivery and stuff on their trucks, because of the inventory and stuff, this does not mean that the people cannot get, there's demand still in the market, but there's not enough inventory or supplies that you can get due to the COVID and all the lockdowns, opening up, closing down, opening up. Eventually people are getting fed up with it. I don't mean to be mean, but things have to change the way we operate in order to get the economy back on its feet and run back up, because there's still a demand. It may have a hiccup, but you have to pay attention to that reversal hammer that happened and came back up after the earning report. Does this mean it hold it because this gap filled, or do we go back all the way back down into this consolidation before continuing higher in Tesla? Let's take a look at LMT, Lockheed Martin. We can see, I'm just going through a couple of them, then I'll go to the ETFs. We can see Lockheed Martin made a new high due to the global, between Ukraine, Russia, and all the, the supplies for military equipment. Lockheed Martin rallied. Let's take a look at Boeing. You can see Boeing's at the low. Does this mean Boeing from that hammer reverse and clear that 192 area, 195 to get back above the 205, 206 to continue back to that linear regression up channel? We have a midpoint here. We have the high and low. Does it mean it can come back here to clear up, or does it fall through that linear regression down channel? You can see I have a wedge here on the weekly charts. That's Boeing. Let's take a look at NYA. I put it in earlier. I want you to pay attention to the overall market. NYA represent the overall exchange on the New York Stock. It was consolidating. We looked up, we fell back in. We looked up, we fell back in. But we are holding the 38.2. Does this mean we can clear the 50 and the 200 SMA on the daily? Let's take a look at RSP. We can see where RSP is in relationship to what we're holding. We're right underneath that 200 SMA, J and K. This is the interest rate bearing account for the Bloomberg high yield bond. Does this mean if the bond market is going to stabilize and interest rates are not going to get spiked so high, does that par value of that bond go back higher or not? Let's take a look at the IEF. This is a 7 to 10 year note. You can see it's in a similar situation. It just stalled right here. Remember, the Feds are a little bit tied up their arms. They are forced to do something, okay? So pay attention to the Federal Reserve Board. Let's take a look at the SCHG, the growth company in Schwab. You can see there's a small little reversal there. You can take a look at the XLF, the financial sector, XLE, the energy sector. It's on an annual high. Does this mean it's going to slow down a little bit to come back into that 59 area before continuation? You can take a look at the XLP. I mean, I'm just putting some out. That way you can pay attention to the spiders, the iShares. And we're going to look at last, before I go back to the ES, at AARK, ARK Management. Oh, ARKK, sorry. ARK Management, if we take a look at a 2-year history, it has lost more than 93% of its value. We're going to do it on a 2-year chart. So you can see that the March low of 2019, where it was in 2018, 33 bucks. If I take this high from here to where it hit this week, the low, you can see this is the close of it. It has lost more than 58% of the move for the prior 2 year. If you look at this area here from high to low, it had a 384% return. When we look at it this way, coming back, it came back to the prior year consolidation before the breakout that happened in July of 2021. Does this mean it's going to find support at the 38.2 and reverse back to the 50 to the 100% back of the prior year low for the year? Or does it continue to the 50 minus 50% or the 61.8? Because a lot of money managers are shorting that position against Kathy Wood. I'm not biased. I'm not against her, but I think that the people don't understand the risk, and they don't know how to manage risk when things do change and go south. Instead of managing the risk and protecting the capital, they end up holding a position and it's eating them up alive while they're holding that account. Let's go back to the ES, and we're going to go do it on a 4-hour chart. And what we're going to do, we're going to go to the time frame. We're going to go intraday. We're going to do like a 45-day range, 30-day range should be fine. We can do a 4-hour chart. And we can go, okay, this is the overnight action. If I take the overnight action, we can see that the range was in consolidation. We can take the monthly Fibonacci off, which is okay. I don't really need it, but I want you to see where we tested. The overnight action is the gray area. The trading hours are in white. If you want to see it all in black, you can go to style in this setting. We can go to the futures. Instead of highlight the overnight, we can push highlight off, and it becomes a black chart. So we know we are in a linear regression down channel. We consolidated in the last 5 days. We're going to move into this area here. And what I want to do is put a line through here. You can see that consolidation to this candle. We have finally tested the 50 simple moving average, and we broke out of this channel. And we broke out of the linear regression high and low midpoint of it. That means the Monday move up, then Tuesday inside day, the Wednesday, Tuesday night, Wednesday morning was an up move. Fed announcement was down. Thursday was an inside looking up. Friday, they tried to look up. We did hold the 42.65, let's call it. This is a very important number in that channel. And at the same time, that 42.12 is a very important number if we lose the 50 Fibonacci on the annual chart. If we recover through the 50 and get back to the 50% Fib and the 61.8, maybe it gives us a little bit of reference point, this candle here, if we can overtake it to continue higher or not for the prior weeks, because this number, the 45.75, 45.78, 80 area is a very important number for the bulls to take in order to continue higher. If we cannot and we end up losing this candle down here, pay attention to the channel, which is the linear regression from here to the downside. If we fall through it to the downside, but the accumulation was more to the upside, I am looking to be a little bit more to the bullish side to up in this area, because this was the linear annual regression channel that we lost in the year from 3/4/2021 till 10/2/2021, and this is the 2-year from the March 23, 2020 till December 20, 2021, which is this area here. I put that line up here so people can pay attention to where we fell down from. So we got a couple of lines that we have to go through this channel here, which we tested. We tested the 50 high and lows of it. Does this mean in order to continue, we clear the 50 SMA, then eventually the 116, get to this area? That's an important area to get in order to get the momentum back up and clear the 46.25 area to continue higher. If we end up losing, coming back in the range, pay attention to the 42.65, 60 area, then eventually 42.12. I hope this was helpful, this video. I look forward to seeing you on Discord. Hit the thumbs up, subscribe to YouTube. It's a weekly free video. Take care, over and